If you're going to be buying a house, understanding the best mortgage for you is crucial to your success. After all, it's your finances. You're going to be buying a house. This video is for you. We're going to unearth the high points on conventional loans number 5. This is for owner occupants, second homeowners, and investors. Eligible borrowers can do 3% down. There can also be down payment assistance. There is going to be mortgage insurance if there's less than a 20% down payment on the property. There's more flexibility with the mortgage insurance on a conventional loan because you can get the mortgage insurance removed without refinancing down the road. So all those people that had those low rates could be getting rid of mortgage insurance without having to refinance. It will need to be there at least 2 years after closing if you have it. But again, you can get it removed without refinancing the home. It is very much tied to credit score and debt ratios as it relates to mortgage insurance if you don't put 20% down, and the interest rate is very much tied to your credit score and conventional loan as well. So if you have a 680, you might have the lender talk to you and compare an FHA to a conventional, or show you what you can do to raise your credit score before contract to maintain that conventional loan if the conventional loan is right for you for the future home you're going to buy. There is more restriction on debt ratios. If you're putting less down, say 3%, have a 680, 700 credit score, don't have much in savings, you may not get an approval over 45% on the debt ratio, but you may. So this is one where you really want to work with an experienced lender to make sure you don't have surprises after you go under contract. This can be great for those with variable income because if you have bonuses or commissions for at least 1 year but not 2 years, you can likely use it, whereas FHA, VA more likely will not allow you to use it less than 2 years. Rental income for all loan types, there are variances, so specifically bring up those questions or comment below questions about rental income if you're going to keep a property or already have rental properties and are buying another home. Seller concessions can be anywhere from 3 to 6%. That depends on your down payment. So keep that in mind, but ask your lender, how much can you ask for seller concessions if that's going to be part of the equation for you? You are allowed to have the escrows outside the payment. If you're buying new construction, check out my channel, subscribe. This is a video for that as it relates to new construction, because you might want the taxes and insurance outside the payment. If you like to manage your money, this could be great for you as well, because you will only pay what you actually owe. And if your taxes go up, your insurance go up, an escrow shortage will raise your payment and likely more than the actual amount needed for an escrow shortage. So having escrows outside your payment might be something to think about if you're going into a conventional loan as well. You can also do renovation, one-time construction, they exist. Another cool feature about a conventional loan is a thing called a recast. A recast is where you can make a large principal payment to reduce the balance owed, and they will recalculate the principal and interest on the remaining terms without a refinance and reduce the principal and interest per month to pay it off on the original term of the loan, known as a recast, like your arm cast. Definitely, if you have comments or questions about conventional loans, put those below. That is a very wide topic. As I said, I would share a video for you that this one will go over some important information about closing costs, planned and unplanned costs of buying a house. This is an important one. I would watch it if I were going to buy a house. And then below, I have additional links for you about these things that I've talked about in the video. Thank you so much. I hope this is helpful to you today. Subscribe if you find value in this content as you begin the journey to buy your home.